I'm about to tell you why it's time to ditch Apple's overvalued shares and where I'm putting my money for much higher growth. Hey guys, and welcome back to another video. Over the last year, Apple's had an amazing run-up of 34.72%. It's beat the S&P 500. It's honestly exceeded my expectations significantly considering its low revenue growth. If we take a look over at Apple's financials and we look at their revenue over the past 3 or 4 years, it's been largely flat, which is pretty surprising. Apple's revenue has started to stagnate. It's no longer the growth darling that Warren Buffett once used to know and love. People have enough iPhones, it seems. So the question is, why has Apple soared in the past year if the revenue has largely stayed flat? Honestly, it seems like it's just multiple expansion. Look at the PE ratio, it's almost a 39. This is a company that's growing at maybe 5 to 10% a year, and it has a PE ratio of 39. If we look over at NVIDIA is projected to grow in the high 20% range, and its PE ratio is a 54. The forward PE of NVIDIA is lower than Apple's current PE. It's absurd. Actually, it's so absurd that NVIDIA's current forward PE is a 35.42, where if we look at Apple, it's a 32.44. They're almost nearly identical, and NVIDIA has 3 times the growth rate of Apple. If we look at Microsoft, the forward PE, 29.58. They're probably growing around 50% faster than Apple is per year. This is ludicrous. What is going on with Apple? And this is exactly what I want to get into today. I'll be honest, guys. Apple's a company past its prime. Look around in your neighborhood. Who has an iPhone? Everybody has an iPhone. The iPhone makes up the majority of the revenue that Apple brings in every single year. It's over 50%. Right now, Apple is at a historically high PE and forward PE. And to some extent, this is deserved, right? Because back in the early 2000s, Apple was largely seen as a hardware company, so it was trading in between 10 and 20 on the PE. But now, Apple has transitioned into a massive ecosystem and now has a broad base of services that it provides its customers. But I think Wall Street's mistaken. I think traders are mistaken. I think investors are mistaken. I think they're wrong. And one of the big hype frenzies surrounding Apple is Apple Intelligence. Apple Intelligence is not the thing that is going to make Apple's revenue explode. Apple is not an AI leader. Apple's not making their own large language models. Apple is simply integrating artificial intelligence into their devices so that their users have the latest and greatest technology to take advantage of on their devices. If they didn't do this, they would fall behind their competitors. Somebody could come in with an AI phone and just steal market share out of Apple's claws. Apple doesn't want that. Apple needs to constantly innovate, and this is what they've done over the past few decades, right? They're constantly making their devices better. And right now, AI is the next big thing, and they know that they have to implement that into their systems. But this isn't a growth story for Apple. It's a maintenance story. It's a I'm not going to fall behind my competitor story. I'm staying ahead. And that's why they're partnering with OpenAI. They're using OpenAI just like they were using Google to have the latest and greatest search, to have the latest and greatest large language model on all of their iPhones. Apple doesn't really care about AI, but Apple needs AI so that they're not obsolete. Apple Intelligence is a sham. Everybody thinks that for some odd reason, AI and implementing it into the iPhone is going to be this massive growth story. People are thinking that there's going to be some sort of a super cycle, and I don't necessarily think that's wrong, but let's say the super cycle happens. Then what? What about 5 years from now? What about 10 years from now? I don't invest for the next 3 to 5 years. I invest for the next decade, 2 decades, 3 decades. I want to see a company with a lot of growth potential over a very long amount of time. And I don't think Apple has that today. I think Apple Intelligence, I think the services that Apple is providing, I think the high multiple expansion and the high PE that Apple contains right now is just absurd. I think it's overblown. And I think a lot of Apple shareholders are going to be disappointed in the next few years as Apple underperforms the market. So I made this nice pretty graph to show you how overvalued Apple really is. Now, if we think about PEs and forward PEs, they're largely built on the expectations of the future performance of a company. So if a company is expected to grow a lot, the PE is going to expand to adjust the stock price for that expected growth. We can see that exactly in 2020, the PE ratio was at a 35, while the forward PE ratio was at 29. If we look on the right-hand side of the annual revenue growth percent, Apple that year expanded its revenue almost 35%. I think that's pretty justified. This 35 PE, the 29 PE, these high PEs, these high multiples are justified by this high growth rate. That makes sense to me. But now, if we skip over to 2024, the PE is massive again, but we're not expected to grow nearly as fast. We're expecting maybe 5, no more than 10% growth from Apple's revenue. It doesn't make sense. I pulled up this article from October 31st of 2024. The headline's Apple Services unit is now a $100 billion a year juggernaut after phenomenal growth. But here's the interesting thing. Apple's services are only growing by 12% on an annual basis. 12%? Is that really enough to justify a nearly 40 PE ratio? I don't think so. I do think it's enough to justify an expansion of the PE from this low 13 or 14 up into the 20s. I think the services segment of Apple's revenue justifies that multiple expansion, but not this much. Because the gross margin of the services segment is so high, 74%. I mean, that's like Nvidia's gross margin. That's huge. That's highly profitable. I mean, this is essentially a cash printing machine for Apple. It's huge. And that's why investors love it. But we have to ask ourselves, what is the real price that we are willing to pay for these shares with this gross margin and with a services segment that's only growing at 12% a year? Well, I wanted to do some math for you. I broke down Apple's revenue by segment. I broke each segment down and I showed you what the percent of net revenue was. Services is now 21%, over 21% of the net revenue. In this column, you can see the growth rate of each segment. The iPhone has largely been stagnant over the last few years. The iPhone's revenue has declined just under 1% year over year. The Mac and the iPad have expanded 15%, which is great, but the real segment that investors are really worried about is the services segment. The services segment has expanded 14% year over year as of this last quarter of 2024. Now, on this right-hand side, I'm trying to show you what I think would be a generous growth rate for all of these segments. So I'm going to say that nothing's declining. I'm going to say that the iPhone's going to grow by 7%, which is higher than inflation. The Mac and the iPad are growing a little bit quicker at 16%. Wearables also not going down, meeting inflation. And services are expanding not at 14%, but at 20%. I think I'm being very generous here. I think I'm being very reasonable. And so when I put these numbers into my spreadsheet, the projected growth rate of Apple's revenue on just what is actually projected to happen, not my generous growth rate, is only 4.44%. Shout out to Jay-Z. 4.44%. That's not much, guys. When you put in my generous numbers, Apple's revenue is expected to grow year over year, next year, by 10.6%. Now that's a good number. That's a pretty good number by most people's standards. But it's maybe just in line with the S&P. That's average. It's really not that great. And it really doesn't justify a 39 PE. Now, if you count in the share buybacks, last year they bought back 2.2% of their shares. So if you add that 2.2% to the previous growth rates that we calculated, you'll get a growth rate between 6 and 13%. I don't know if you guys watched any of my other videos, but I've got a saying on this channel. If it's not over 15%, ladies and gentlemen, it is not worth my time. It's not worth my time. I'm young, I need to take risks, and Apple is not where I'm going to be putting my money. But hang on, hold your horses. I know I'm being harsh on Apple, but at the end of the day, Apple is one of the best companies in the world. It continues to have a dominant moat. It has a very wide ecosystem. People have iPhones, Macs, iPods. Shoot, I still have my iPod Shuffle from when I was 8 years old. I still use it. I love my iPod Shuffle. Because of this moat, this company isn't going anywhere. It's going to continue to dominate the personal device market in the United States and probably abroad too. Apple consistently innovates. It's implementing AI into its devices. And while AI isn't going to grow Apple into this AI juggernaut like Nvidia or Amazon or Microsoft, what it is going to do is make sure that Apple doesn't fall behind. AI is a maintenance story. It's not a growth story for Apple. It's just making sure that users are able to use the latest technology, the latest comforts, the latest innovations on their Apple devices. That's all Apple Intelligence is. But despite that, despite all these pros of the company, I'm selling. If you're someone looking for a more stable portfolio, someone who has faith in Apple, or maybe you just completely disagree with me, hold the stock. I think the valuation right now is way too high to buy. I really would not be buying Apple stock at this time. However, if I had a position in Apple already, I would definitely be holding my shares and waiting for a massive dip when eventually Apple disappoints its investors and maybe there's a delay on Apple Intelligence, buy that dip if you want. Well, ladies and gents, that's all I have for you today. Thank you so much for watching. If you want to know where I'm putting my money, go ahead and watch the video that's about to pop on your screen maybe 10 seconds ago. Thanks for watching, and if you feel that I've earned it, please subscribe. Thanks.